Yeah, I'm still a bit confused about the liquidity issue. And so, are tokens essentially the same as Ethereum or Bitcoin, or are they like another currency that is now a little bit more esoteric?
So when you think of Bitcoin and Ether, think of it as currency. So just like a US dollar. When you think of a token, especially one that would be issued through Start Engine, that's representing like a stock certificate would be a good way to conceptualize the security tokens that are being issued out through Start Engine. We still have a transfer agent that's operating in the back end. So we've seen different hacks, different problems, different investor protection issues. The transfer agent that we operate in-house is the final authority over who owns what equity stake in your company going forward. But that stock certificate can now be traded between different digital wallets. So that would be probably the easiest way to conceptualize the difference.
Once they're issued, then there are exchanges online where you can, if they, if that exchange has that token listed, you can go and see what the, like a stock market, you can go and see what tokens are out there and what the price is, and you can buy or sell on those exchanges. So right now you can go on, the first one that started, if you're not involved yet and you want to like dip your toe in, one of the things that I would suggest is going on to something like Coinbase, which is a very easy exchange to register yourself, just like opening a bank account. You go there, they've only got like five or six tokens on it right now, but it's really simple to use. And you go there and you open an account and you link, you do have to have a little bit of trust because you do link it to your bank account because you're going to put money in to buy things. But you go there and you put $100 in or $200 in and buy a little bit of Bitcoin, or you buy a little bit of Ethereum, or you buy just, I would suggest that if you're not in this at all, it's a great way to just get familiar with how this works. So that's one of the big places that people get started is something like Coinbase. The other one that has a lot listed is Binance. It's a little bit more complicated to use, but you can see a lot of things listed there. Does Start Engine have a exchange set up?
So you could go to our site today and you can see a beta version of the secondary trading platform that we've been putting together. Start Engine's currently in the qualification process with the SEC to be certified as a broker-dealer, which will correspond with the launch of our own alternative trading system, which will operate exactly like a Coinbase.
So do we see like that down the road? Like, right now we have a security that you have to get listed on the SEC exchange or on a stock exchange and then you can trade. Do we see sort of a scenario where, we can trade on anything? Like, for example, there is a painting, and so we might want to, trade on the perceived value of a painting or artist rights. So in other words, the ability to trade on something is, are we looking that down the road, like you could basically trade on anything? And is it pretty like who's going to sort of control that process? And then if you can just say a few words about just long-term viability of Bitcoin, because it's kind of been sort of experienced some things, that would be great. I appreciate it.
So first, regarding your idea around the tokenization of something like art, a great company to take a look at would be CryptoKitties, if you're familiar with them, where you can go to their platform and you can buy these little digital representations of cats that can then sit in your digital wallet and you could theoretically trade and pass around. So that would be one example. Really, at the end of the day, what we'd be looking at to determine whether or not the token is a pure utility or security is the Howey test, which is something that I think Curtis and Blank referenced in their presentation. It's the SEC guideline for determining whether or not something is going to be viewed as security and whether there's going to be all sorts of pre-existing government regulations that are going to be attached to that. Anti-money laundering laws, know your customer checks that have to happen for any sort of exchange. In terms of the ability to do that, absolutely. I see the market opportunity for CryptoKitties and for other things down the line. But you'd probably have to get a lawyer involved to make the specific determination around, how it's going to be perceived by the regulators that come into the space. When it comes to Bitcoin and its long-term value, I actually think it's a great thing. I know it has dipped dramatically over the past few months. I think it's down 80% from its high point. I think the market got a little bit overexcited, but very much mirroring how the general population reacted to the birth of the internet as well, when we saw the internet bubble in the 90s. I think things have gotten ahead of where the technology is today in terms of the valuation. That's why we've seen the steep decline since. But I think Bitcoin brings a lot to the table as a neutral third-party arbiter around what is actually valuable versus relying on different government systems to determine what that price point is. We see as a great example of how that can go wrong in like Venezuela, for example. So I do think there is long-term viability for Bitcoin. I know it has some technical issues, and I don't think that the space is fully developed, but the signs are very, very promising at this stage.
Yeah, but there are, just to add on, there are a variety of companies that are creating systems to have a digital representation of any asset you own, whether it's your IP, your painting, your real estate, anything that you have, you can have a digital match to that, and then you can then allow others to invest in it or to own pieces of it. So there's a lot of companies working on exactly what you were mentioning about having everything have a digital signature or digital pairing, and then allowing people to easily trade or transfer or own pieces of it. We've talked about that in real estate. It's happening in art. It's happening in many different areas. And there's lots of companies that kind of want to build the infrastructure that makes it work and easily transferable to your question. So I think the next one was up here. So I'm going to run way up. Here is Phil Donahue for you older folks in the crowd.
Thank you. Hello. So the question I have is, how far does a regulation go? Because this system is built on deregulation. So when you say, when that's said, where does that stop in regards to ICOs, in regards to trading, and et cetera?
Yeah, so I would view it, I guess, in my experience of what's happening in the United States versus what's happening around the world. Around the world right now, the ICOs still seem a little bit like the Wild West. It's really essentially anything goes. A lot of countries have been cracking down. Others don't know how to react to it. It's really not developed yet. But here in the United States, the SEC has made it very, very clear. They believe that current U.S. securities laws absolutely apply to all these different token sales and capital fundraising efforts that have been going on. So I would say, from the U.S. perspective, it doesn't seem like much is changing. The SEC is forcing these ICOs to adapt to the pre-existing structures versus updating any of the regulations. I think as we just heard the other Ethereum co-founder presented at Start Engine's recent event down in Santa Monica, his name Charles Hoskinson, and he gave an incredible presentation about how Ethereum tokens will help bank the unbanked and facilitate microfinancing and minor credit loans, things of that nature. I definitely see the long-term opportunity, especially for the world over, and the benefits that the blockchain can bring there. But here in the United States, the costly regulations that you've always encountered seem to still be holding true. So things like AML KYC checks, which verify that it's not like money laundering or something going on, that's still very much in place. Nothing's changing on that front.
Do you know of any of the utility companies that are willing to take payment for their electric bill with Bitcoin? Because if miners use electricity, could they pay their electric bills? Do you know of companies that do that?
So I don't know a company that does that, but that's a great question. I just saw recently that the state of Ohio is now accepting tax payments in the form of Bitcoin. I guess I could see how it would apply to utility and power companies as well, but I can't say I've seen a specific example of that thus far.
Now, I do know companies that are starting to monitor usage of electricity and water. There's companies that are creating, one of them here, that's creating systems to monitor water usage and water minerals in water along the chain on the blockchain, but I haven't seen anything with.
And I would actually reiterate, we have some of those Internet of Things companies on our platform today raising capital. They haven't made it blockchain based, I don't believe, in the specific instances I'm thinking of, but I would definitely check out the Start Engine site. There's about 270 companies that you can find down there right now, and a few dozens of them are ICOs, so it'll give you a lot of background and perspective.
So for both parties in the transaction, the investors and the startup, in addition to kind of the investment risk, is there also kind of a currency risk in conversion with the tokens?
So on our platform, when we accept investment into a different company, the investor can put forward the investment through ACH or a wire transfer. They could do a credit card payment, or they can submit their payment through a Bitcoin or an Ether transaction. When they do that, we actually put the currency fluctuation risk on the investor if they choose to utilize that payment type. We do a conversion at one specific point each time, each day, and if the price is fluctuated, it's going to affect what the investor gets in return. But for the business owner themselves, at least on the Start Engine platform, everything comes in the form of US dollars. Yeah, I mean, there's no question about it, and something that is disclosed in every single company that raises on Start Engine. Startups are a risky investment. This is part of the reason that the SEC had historically prohibited the general population from participating in them. But all of these disclosures about relevant risks are all made to investors in advance. So everything is very much above board. The investor knows what they're getting into prior to committing capital.
Hi, two things. I wanted to address the utility question that he brought up. So I know that in Brooklyn, there's a microgrid that's happening where people are actually trading their solar energy and kind of bypassing the utilities themselves and using Bitcoin to facilitate those transactions. So I can see Bitcoin and blockchain kind of phasing out utilities in a way to use solar. So that's my 2 cents on that. And then I had a question on addressing the Ethereum Classic and how that switched. Is that kind of why Bitcoin Gold and Cash came about, or is that a separate issue?
There were a lot of, like, the purists were the ones who were like, no, we want our Ethereum Classic. We don't care if people stole it. We don't care if the value dropped like 90%. So it's actually seen a resurgence because they were like, oh, it's stayed strong to it. But yeah, you'll see that whenever there's a vote. And so this kind of gets back to what Blake was talking about initially on like maintaining a voting system. The way that Bitcoin was initially developed was like one vote for one machine. So if you decide to download a new version, like a new updating software, that forks the chain, it's called a fork, where they go two separate directions. That's where you have two new currencies. So what happens when there's a fork is either everyone jumps on and then you maintain the same one, or they split and go two different ways. So that's Ethereum Classic, that's Bitcoin, Bitcoin Cash, and then that's right now with Bitcoin Cash, Bitcoin Gold. So there was a splinter off of Bitcoin and Bitcoin Cash. And some of these, they end up with like arguments between developers with how big the block sizes should be, and so you get into like hyper nuanced technical arguments on, we're gonna do it this way, so we want everyone to vote for ours. And a vote for us is by downloading this new ledger, and then we'll go this way. And so that's what you saw with Bitcoin Cash and Bitcoin, and then right now with what we're going through with Bitcoin Gold. So there's two different proxies that they're kind of fighting it out.
Can you speak to blockchain speed in relation to Ethereum and newer ones like EOS or Steam? Because I'm more interested in the social space where I need multiple transactions at a fast rate. So can you speak to that, please?
So there's all these new chains that are coming out that's basically around speed, right? And with that speed is like you're saying, like Steemit, right? Like EOS. And they're all claiming that they're going to be faster, right? Ethereum is doing that too, where they're saying, okay, EOS is at this rapid pace speed that we need to catch up to that, which then leads to another fork, right? And so in that kind of environment, there's a lot that are coming on that, like I was talking to one that they're like, we're 100x the speed of EOS, right? But there's big claims. They're like, this is what our tests are. So, my personal, case on it, or my mentality behind it is go the one where most of the people are on it, and you can always, if you're building out a technology that's utilizing blockchain, you can always essentially be, future-proofing yourself in the sense that you can jump chain whenever you want, right? So you can be on Ethereum right now, and then, you can raise on Ethereum, and then you can jump to EOS, and then you can use that as essentially the protocol that you're building off of, right? When that new one comes out, go to that one.
So interface between the blockchains and who regulates them. I think the first, what Walmart is doing, I think is they can create their own, whatever they do, because they have the rights of it. But what smart engines do is regulated by the SEC. So blockchain is just technology, and who can utilize that to whatever they fees. Therefore, they have a couple different platforms. And you also talk about the ecosystem of blockchain. So how do you see those interchanges between the SEC world, investment, financial aspects of it, and also something like Walmart, who may have one supplier who want to supply to Walmart to Target, and using the same theory, but they have two different platforms, how they can interface those two platforms, or they cannot. I mean, is there any those two there?
So it's a really great question on where do those kind of intersect and what is regulated, what's unregulated. So what Walmart's doing is they're simply using a blockchain to manage their inventory. There's no tokens. So that kind of removes that one. There's no regulation over it because there's no tokens. They're just using a distributed database is all it is. That's what blockchain is. It's a large distributed database, a large distributed ledger. Where the Securities and Exchange Commission comes in is in deciding whether it's a token, which is like a Chuck E. Cheese token. No one is going after Chuck E. Cheese for saying, hey, these look like securities. And there's a couple reasons for that. The first is the Howey test that's been referenced a couple times. It's a 4-factor test on it. But if there's an immediate utility to it, like a Chuck E. Cheese token, where you can spend it and use it, by the way, none of this is legal advice, so just let me caveat that. But if you can immediately use it and spend it and have access to it, then it's very, very unlikely to fall into that security token what a security is. That's actually, the SEC has came out and said that Bitcoin is not a security. Because there's no one really behind it, and there's no company profiting off of it. It was more put out there as a thought experiment that really took a lot of hold. So in one sense, you can use it and spend it, and so that falls in the token category. The other one, and that's what people call our utility tokens. But recently, what's happened is people go, yeah, this is a utility token. We're going to build this great thing. People are going to come. It's going to be so exciting. Everyone's going to love it. But we're going to take your money. And we don't have the thing yet, but we're going to build it, and then everyone will come into it, and then everyone will use it, and then some people, then an exchange will pick it up, and you can trade it, and you'll have liquidity of the token. So give us your data, give us your money, and we'll build a company with it. And the SEC goes, okay, this looks a lot like you're doing a fundraising event, and you're going to take that money that you sold these tokens for, and now you don't have an operating token. I can't go and spend these in an arcade. You are just using this to build what you say is going to exist. This looks like you're fundraising with it. And so under that definition, most of these utility tokens fell within an actual security. And so that's where the rub was. And that's what we're still kind of figuring out. There was actually just a memo that came out with Paragon a week or two ago that the SEC was like, yep, we're regulating that. And exchanges, yes, companies doing ICOs, thanks, we'll take that. And so they've kind of reached into a lot of those areas and said, yeah, these fall within our purview. Because their whole thing is protecting consumers. A lot of these ICOs are going to go 90, 95, maybe even 99% of the companies are going to go under. They're not necessarily trying to go after the folks that have a functioning group of people that are using their token, that enjoy it, that are liking it. They're going after more of the bad actors that are trying to raise money.
So let's say just within a specific country, like the U.S., it's anybody can, pay with dollars. Do you see because you have your fingers on the pulse of, cryptocurrency, do you see Bitcoin or any other emerging cryptocurrency becoming common like that someday, or?
So on a global scale, that's kind of the reason why that Bitcoin came about. There's something like 8 or 9, maybe 10 countries that base their current currency, their economy is based on the US dollar, and that has sort of imprisoned those countries to use it. And so because of it, so Bitcoin worked in that sense, and this is why it kind of had some mainstream operation in that, because it allowed these countries a little bit more freedom around it. And also with that too, it's because with the Bitcoin mining in countries all around the world, they're able to mine, and the income per capita, right, in those countries, they're able to do a lot more with that mining in that country. A perfect example is like Vietnam, where I think it's something like $300 US a year is the typical yearly income, where people are now becoming, very wealthy, making $3,000, $4,000, $5,000 a year by just doing bounty program hunting, which means that they're unlocking these bounties that are these programs that are out there that these blockchain companies have produced for them to be able to do these objectives. They unlock them, and then they can get essentially a tradable currency that they then go to an exchange, they can transfer it into Bitcoin.
But there are other experiments going on trying to make these tokens more ubiquitous to everybody. So I can't remember which African country now has allowed tokenization of cell phone minutes. Do any of you know which ones I'm referring to? There's one where they've digitized and tokenized cell phone minutes, and people are paying each other for goods and services through the exchange of their cell phone minutes. Because while these people don't have money, most of them still have phones, and they're buying minutes to use on those phones, and people are paying in minutes using tokens that equal those minutes between people.
So the idea of going back to the whole idea of the supply chain, the infrastructure, and all that, and if you were a manufacturer or brand, currently today, if all you want to do is, hey, I want to take advantage of the blockchain, I don't want to go into the business of blockchain, I want to take advantage of it. Are there tools that I should be aware of and I should be using today? At what point in the future will I actually be impacted whether I want to or not, and what is that going to look like? And then let's say I want to get a jump on and go, hey, actually, I want to be a pioneer and I want to start really pushing it. Where do you think those opportunities are going to be? Focus mainly, I think, on the first piece. Like, let's just say, like, hey, I'm a brand. Like, what should I do to get, we're going to plug into now.
So if you're here to build your own blockchain, this may be the wrong introduction to blockchain. So if your goal is to now you're going to be Walmart and build your own blockchain, it's maybe come to a few more. Maybe get up on a little bit more of it. But yeah, I mean, it's going to be tough to necessarily plug in. And I personally, I think from the manufacturing side, you'll see more benefits from some of the other technology in the space, specifically some of the tracking technology, some of the artificial technology, and there'll be more benefits in the cloud computing and cloud checking, maybe in the smart contract space. But as far as like just fully jumping in, it's pretty tough. I mean, I can let you jump in if you want to talk about Start Engine. This is like a perfect one for.
So, blockchain is a really, really exciting technology, and it has tremendous implications. But I do think the market's not fully developed yet, and there are some restrictions on like trying to raise capital if you are set up as an STO. So, for example, we've all seen that different social media platforms, such as Facebook and Google, have actually shut down the advertising of different ICOs. So, before you would embark on building your own blockchain project, I would make sure that you actually have a very concrete idea in mind about how you're going to use it, and if you're going to be issuing utility tokens, what's the specific functionality that's going to be associated with them. I see many companies come to Start Engine that are purely in the ideation stage, that have heard the buzzwords about blockchain, and they know that there's a lot of money being thrown around in the space, so they want to jump into it, but they don't really have any practical applications for how they're going to utilize it or how it's going to address the needs of the customers they'll eventually be working with. So what I would say is, there are a lot of great businesses and great ideas that have already been put forth. You can go to the Start Engine platform and you can see dozens of them actively raising capital to get things off the ground. A great example would be like patient medical data records is an excellent opportunity for something that could be put on the blockchain. But there's a lot of exciting technologies as well. Before I came to Start Engine, I was working with a lot of Industry 4.0 techs, everything from robotics, Internet of Things technologies, drones, artificial intelligence, and so on and so forth. So the blockchain, it doesn't exist alone. There's a lot of different technologies that are complementary to it, and there's a lot of really exciting innovation that's happening, probably more today than at any point in not just US history, but really human history. There is more now that you can put together and take advantage of than at any point historically. It's just a question of being that entrepreneur that creates something of value that corresponds with it.
Linux Foundation actually has, I think, like 6 or 8 different blockchain technologies that you can plug into. If you just look that up, you'll be able to see what kind of plays nicely with it. And then I think within the next 2 years, there's going to be a lot of these companies that are coming online that have done the raises around it, which then there's a thing called dApps, which is essentially decentralized application. It's what is being plugged into these ecosystems of blockchain. So they can plug in as a completely separate thing. And in that marketplace, and as they're playing, you're starting to see a lot more. That opens up the centralization of it, because a lot of these companies that are coming online are actually centralized or not decentralized, because they're trying to own everything in its entire ecosystem rather than opening it up to everything.
I want to add to that too. I think there's a good parallel of that question to the internet. Right? When the internet first started, nobody knew exactly what it was good for or how people were going to use it or what it was. So there were a lot of applications that were put on the internet that failed. Trading, auctioning, selling things online, and nobody really quite knew how to do it. And the question may have been to manufacturers and retailers at the time, like, what's this internet thing? What are we going to use it for? We don't know. It's just a place to share information. And then people figured out how to start selling on it. I think it's a very similar thing with this. I think step one is just to start to learn what this new enabling technology can potentially do. And then it's going to be, okay, well, now that I understand this new enabling technology, if I match that technology with some of these other ones like RFID and cloud computing and artificial intelligence and machine learning, are there ways that we might be able to then enable and use that technology within our businesses? So the kind of step one is just understanding that it's there and what it is and what it could potentially do. And then everyone has to figure out, like, how is this going to apply to me in the future? I think that was to your first question. Is like, is there something that people can do with it now in the manufacturing space? I don't really think there is, but it is a really innovative space, and people are going to come up with all sorts of new and different potential uses for it than anybody here can do. Like, all these people that are raising money through STOs are just pie in the sky thinking in a lot of cases right now about, hey, I'm going to put my farm on the blockchain and see if I could sell pieces of each ear of corn that comes out. And that's the stuff that's happening. So I think that's true with anybody that has a company that is creating an asset and figuring out what they might be able to then use it for. I think your other question is also one that I thought was most important for doing a session like this, is that everyone in the manufacturing and supply chain world is going to be affected by it one way or the other. So everybody must better at least start to understand what it is, because it is going to affect you. And that's either going to be with customs clearance in importing and exporting, or digital payment systems, or insurance, or verification of validity of the products that are being moved throughout the product chain, IP ownership, validation of authenticity, all that stuff. There's I think a very strong likelihood that that stuff is going to go through the blockchain, and therefore, if you're in the business of manufacturing or distribution or supply chain management, this is going to affect you one way or the other, probably within the next couple of years. So that's why I thought it was really important to have this kind of like educational foundation to what it is. Does that answer your question?
It's just a quick clarification question. So you have your STO as an entrepreneur and you're using that to raise money, but what if you're creating a DApp that has its own cryptocurrency built in? Is that a utility token, or is that the same thing that just kind of runs through?
You can essentially just sell those tokens as your product, right? I think you mentioned that. Someone did. But you can just sell a token because that is your product, right? It's like a SaaS.
Talk to your attorney on that one.
I was going to say, it's going to come down to the Howey test. Yeah, I would say if you're looking to raise capital and you have a utility token functionality that you want to issue alongside the equity or debt stake, absolutely go that route. If you just have a business idea for a blockchain but aren't interested in issuing tokens immediately, just do a traditional capital raise. You can still speak about the blockchain, but it'll save you a lot of headaches.
Well, we want to thank our speakers, Curtis, Blake, and Siler, for giving us information about the blockchain, cryptocurrency, and ICO. We want to thank our sponsors, Abacus Wealth Management, for videotaping this wonderful event, for Khalifa Farms and LegalZoom, for providing this opportunity for us to put on this series for you as well. And we want to thank you in the audience for coming up with these great questions to educate everyone about these terms that we're talking about. Please continue to follow us on Lacey for events, and also Making It LA for events for the next upcoming series on Dollars and Cents. And please have some more of the refreshments here, and thank you for coming out. We appreciate it.